Good morning, everyone. This is the macro meeting for the Goldfields Fund. Today, we're initiating another month, February 2026, and we have some big moves in the market today. We have gold and silver dropping a lot since last Friday. We saw Trump nominating Warsh for the Fed. Market took it as a hawkish attitude indication because when Warsh was the governor for the Fed in 2006, 2011, he tended to be hawkish, especially after the great financial crisis when he was against continuing the QE policies during 2010, 2011. Recently, he has leaned more dovish, aligning with the administration preferences, probably. But majority of big players and banks viewed a probable scenario where he will be lowering rates in the short term, but then we'll have to revert and be more hawkish after the midterms or sometime in the future, especially because economic numbers have been so strong, earnings have been strong. The only thing lagging is employment numbers now. So we can see, or we will see on the CME probabilities that the market has become more hawkish short term, but more dovish 1 year forward. So I think that's the reason that even though gold and silver are falling by a lot, the dollar is not weakening. If you look at the XY and even the emerging markets Federal Reserve measure against EM currencies, dollar is not moving at all. We also saw last Friday and the beginning of this week that Japan long yields, their curve has paused for a while after a big move. Market was starting to be concerned. We had some contrarian indicators, monetary base, GDP numbers shrinking, and yields on government bonds skyrocketing to the other side. We were suspicious that we could see a big move towards appreciation of the yen, and indeed it happened. But it happened not because of fundamentals or because of what I just said, but it happened because there was a threat of intervention, both by Japanese authorities and Federal Reserve authorities, okay? So we'll see what happens from here. I think 154 now is not a level to play. It's in the middle of the range. I wouldn't do nothing here. And last week, we saw a continuation of the rally in Brazil with commodities. Today is a very weak day for commodities following gold and silver. We'll see how the Brazilian market reacts. So far, so good because the real is strengthening. Beginning with USA, well, we had our base case and risks. I think that the current scenario is this one where Fed cuts rates while inflation remains in check and growth is resilient. So this gives some support to risk assets. We can easily switch to either one of these two. Economic weakness and Fed continued rate cuts will be slightly bullish for risk assets. And then we have a more pessimistic scenario where the Fed is cutting despite inflation picking up, and then the Fed loses credibility. Less probable and more bearish, okay, if this happens. So speaking about Warsh, he's been the most critical contender to Powell's Fed. I think that last week Powell replied to him saying that criticism wasn't solving anything. He wanted to see actual suggestions of what to improve. Market is wondering whether Warsh may ditch this Phillips curve ideology and bring money back to the Fed thinking, okay? The big sell-off in gold and silver says yes, even though prices were stretched, and part of the move has been speculatory. So we'll see what happens from here and how Warsh is going to behave, okay? Beginning with liquidity watch, we, according to cross-border capital wars, we reached new levels, new record highs, but the momentum has been slowing. This is probably the reason why Bitcoin is behaving poorly. Bitcoin is a big barometer of liquidity. The Fed has, in the recent past, acted to contain stress in repo markets, but liquidity hasn't been enough to ignite a new bull market for the cryptos. Gold and silver were moving on their own lately. We can see regarding liquidity that reserve repo have been on the lowest. Not many cash parked on money accounts. Money has been put to work. Here we can see the intervention by the Fed now is slowing down. Liquidity is being reduced. Bank reserves expanded and now contracting. Some of it went to, as we will see later, went to expand the total bank credit in the system, which is good for GDP and economic activity. Money supply hasn't moved very much, 4.5%. It is a good number for keeping the inflation numbers at bay like they are now. Okay. But total bank credit expanded a little bit. We were on the 4.5%, 5% area. Last number was almost 7%. This is probably one of the main engines behind economic activity improving. And if this spells to more money supply, then we can see in the future inflation may pick up, but that's not the case now. Okay, even though implied inflations in the market have moved slightly up, there's no much concern about this in the short term. We alerted that gold was in the danger area because we adjust the gold prices for the money supply, always remembering that USA only publishes up to M2 money supply, and so that's what we have, and that's what we use to deflate gold prices. And we were reaching 2011 peaks when the bull market in commodities definitely ended. And now we may be at the start of a new bull cycle in commodities, but we don't know yet. Last week's downturn for gold, it is bringing this ratio up to here. It is not a big move yet. I would wait a little bit further to buy. Or if I bought here, taking advantage of the weakness, I would have a stop loss because we could go lower. We could easily test it 3,500 again, where the big acceleration started. As I mentioned, the XY didn't move along with gold and the other precious metals. I think it's because in the CME, this is how it was last week for March, and this is how it is now. The thing is, market is viewing Powell as a lame duck. Probably is not gonna do any big changes or no changes at all until he leaves office. And Warsh, at least to the end of this year, is being seen as dovish, has been aligned with the administration because the odds of keeping rates steady to December last week were trading at 10%, and this week they have lowered to 6%. So we definitely can see that the market is pricing that he's probably going to be more dovish, and then afterwards, after midterms, perhaps he's going to be hawkish again, okay, in line with what he did in the past, probably. For GDP now, we had the wholesale number, and Manufacturing slightly lower, 4.2, still a big number for an economy of the size of the USA. Very strong. The New York Fed staff GDP now also strong, 274. Real growth. This is real growth. Okay. Disposable income keeps climbing. Strong consumer so far, at least resilient. Leading indicators are still pointing downwards, but coincident are still upwards. There's a big divergence here. And leading, they have gone slightly higher the threshold for recession. And current inflation is a little bit higher than the official targets, but it's been grinding downward. So market is relaxed regarding this, but this tide can turn very quickly if we see credit and money supply expanding again. Okay. The break-evens last week, it went from 233 to 236, 3 basis points higher, because even though nominal rates didn't change much, the tips, the yields on the tips were lower. So this, when you divide one by the other, you have higher implied inflation. I don't think the market will see any stress here, as long as we don't breach the 250, 245, 250 levels here, which act as a resistance. If we go higher than that, probably this will spell the rest of the risk assets as something stressful, but so far it's okay. Credit spreads, they have widened a little bit last week, but are still at very low levels. You can see that economic momentum has been keeping these low. Everyone is expected to pay their bills. Junk ETF, the same, very well bid, still higher than the averages. Just released a little doji here, a figure of indecision, but overall still bullish trend, okay, as we can see. JP Morgan gives us this economic calendar for this week. We have important numbers will probably affect economic projections, economic activity numbers. We have today manufacturing PMI, the ISM manufacturing. Tomorrow we have JOLTS, job openings. On Wednesday we have private employment numbers from ADP. We have services PMI, ISM services, remembering always that the US economy is very big on service side, and this is those numbers are very important. We will also watch on Friday official employment numbers by the BLS, expected 75,000 new job basis, and the unemployment rate is expected to go to 4.4%. So still, this will be benign numbers. We'll see what happens, but we'll probably have some volatility around these numbers during this week, especially for FX, precious metals. We also have auctions of 10-year and 30-year too bonds. Well, regarding equities, on this week, last week we reported that 33% of the S&P were reporting of the market cap, and it seems that the gap between earnings growth for Max 7 and the rest of the market is being narrowing. Good numbers for smaller companies, 16% growth. This is good spell for actual economic growth too. And for financial markets, we may finally see the rotation trade between major names and smaller names. You see the projections were growth of north of 10%, and it is materializing. It's amazing how strong it is. From this old HSBC graphic, we see that US is materializing the biggest earnings per share growth in contribution to stock market returns, which is amazing given the size of its economy. Nvidia is still bid. MSTR on the other hand is being sold off a little bit because Bitcoin has been selling. So we may see a reaction here if Bitcoin tests the 75,000 support and goes higher again. So here, let me change. February has been not very negative, but a negative month on average. The S&P 500 still testing new highs, close to new highs. Release some doji figures which show some indecision, but we will see that other areas may point towards possible reaction, especially against gold. We may see a bottom here. Against bonds, the ratio is amazing how it keeps going higher. So it's higher rates and higher equities. I think there will be the stress here emanating from fixed income will only materialize if implied inflation goes higher than 250 or the nominal rate higher than 5%. That's my guess. Okay, so far, as long as that doesn't happen, we will keep grinding higher. The EWM here also threatened to test short-term new highs and then followed Friday's sell-off, but still above the averages. The bank index, big bank index, still testing the averages here and showing some strength on volume buying. Regional banks also okay, probably reflecting what I showed. The bank credit is still strong. Home builders is another difficult story because it has been going back and forth. 2 weeks ago showed a lot of strength, a lot of volume on buying here. Thought that would ignite a move higher, but then failed. Still, for a bullish market, you see higher volumes on upwards movements and smaller volumes on realizations and sell-off. So it is still bullish after all, okay? Walmart, big retailer, also close to its highs, spells good for the economy, for the economic activity. Today we have the VX stressing a little bit. First resistance here. I would wait as a signal perhaps to buy equities if we move into this 25, 26 area, because implied realized correlation has been very low. Implied is also still low, even though it crept a little bit higher last week. But still, it is very low if you compare historically. But then, if we go higher than 20, 25%, the VX at 25, 26%, maybe a first entry point for equities, okay? So that's it for US. We're still a little bit cautious. We would wait stresses on vol and implied correlations to have a clearer entry point. Regarding international markets, we saw a little bit of tightening on France, promises of a fiscal package. Their stock exchange realized a little bit, but still trending higher. Before we speak about China, let's finish Europe. UK, on the other hand, rates have been very big because the fiscal discipline is not going very well. But the pound, the market was probably short pounds and had a big covering last week before Warsh was announced. Same thing for the euro. Euro was quickly above 120. Now it's gone back to 118.5. So here I wouldn't have a position here because euro has been a hard asset to keep carrying. The carry hasn't been rewarding as the rest. So I would be skeptical of the euro at these levels, the pound also. Still, the stock indexes is behaving well. China today releases slightly better manufacturing PMI, but rates are still going down. Their currency is appreciating, which gives room for a possible fiscal package. They tend to act when their currency gives room for it, and if it starts depreciating, they're quickly on pressing the tires. So the way things are going, they'll probably see a fiscal package soon. Their equities are falling this morning to the first buying point here, the first support. Okay. Now we're talking about commodities a little bit. The euro, NOK, the Norwegian krone is viewed. This pair is viewed as also a predictor for the oil market. So it was going lower, meaning stronger Norwegian krones and stronger oil, but it marked a little bottom here, and the oil also marked. Go to commodities. A little top here on 70, around 70. So it is a little short term, is a little bit worrying for the oil. So we have to see what happens from here. In Japan, we saw last week a stress on bonds. Now it's a little bit contained. Funny thing here is that we thought that we could see some sharp yen appreciation that happened because there was a threat of intervention. It is a weird situation where we have GDP money supply contracting, we have GDP contracting, and rates going higher. It's probably because of fiscal challenges that they may face. Their equity index is still very high, though. The ratio between gold and oil, because gold has been falling, moved a little bit higher. We were also buyer of oil, sellers of gold at these levels. We'll see what happens from here. Probably I would still be more favorable for oil, especially because economic numbers are still resilient. You can see there was a big sell-off in gold from last week after Warsh's announcement, but this it was moving, as we say, parabolic higher. These things may happen, people get caught, and sharp moves on the upside and downside also. Silver, the same thing. Impressive how it fell almost 30% in one day. Copper is still big because economic activity is doing well. Still, we have data centers being built, copper being demanded. On the other hand, steel has been sideways for a long time now. if you look at Chinese activity numbers, the old economy related to steel is still lagging the new economy. That's one of the reasons why steel is lagging. Aluminum was exploding high. I also realized a bit following gold and silver, but it is still a bit because of electrification and its uses in electric grids. And regarding soft commodities, they have been trending sideways. Soy, which is important for Brazil, and wheat, important for other countries. Sideways market. Not much to say here. So our conclusion here is that there may be a buying opportunity in Chinese equities now. Stimulus may come. We have to be watching Japan for possible stress signs and opportunities to buy vol on the currency if possible, depending on the levels, if we ever go to single digits again. And commodities, I would be a buyer of oil, but I would wait to see if it goes below $60 again. There's still some room for that to happen, okay? Going to Brazil, last week, probabilities were like this: 53 for Lula, 24 for Flávio. They have moved on Flávio's favor. He spoke in Israel. He went to visit Saudi Arabia. So he's behaving more and more like a real candidate. He's consolidating. Market is betting more on him. Still not enough to be the first container. Lula is still leading, but we never know. And so for emerging markets, all the major banks, I took this from JP Morgan, but all the major banks are bullish emerging markets because they think that developed markets have done their jobs lowering rates, and most of the emerging still have to start lowering. Brazil is the case, where JP expects the first cut for March, 50 basis points. And here are the financial flows in Brazil. Foreigners are big buyers for our equities. Institutional, locals, and regular investors are sellers. And we have seen, for the first time in a while, inflows against outflows on the trade segment, which is completely opposite of what was happening so far last year. And this has turned our FX flow accumulated into less negative. Probably gave room for the real to appreciate because of that. It dipped below 520 for a quick period of time last week, and then after Warsh announcement came back to 530. But it's still a bullish graphic for the real, and the carry trade is heavily on. Here we can see that the one has been carrying real overnight rates against dollar, funding dollar overnight rates. Break even is far away from where the market is. And if we adjust only for our M2 money supply, we are close to fair levels. But since COVID crisis, Brazil has manufactured more currency, so we could be almost at 7, because since 2018, 100 reais on the M2 criteria has become 265, and the $100 only $157, right? This is one way to see it, but another way to see it is that Brazil has also creating more, apart from creating more currency, has also pushed rates higher when needed and creating sharper contractions. So when we adjust for that, we can see that US has been running a smoother path That's probably one of the reasons why real estate and equities have been climbing steadily in the US, and in Brazil they have been going back and forth. And by that criteria, as opposed to the other one, the real should be appreciating. It has been a good trade to carry the real because you create currency on one hand, on the other hand, you push rates higher, and then you give an advantage for the holder of that currency. We are still in contraction mode on that regard. The only problem with that is that you create a fiscal problem long term, but you can see that total debt to GDP in Brazil has been climbing. But so far, the carry trade is the winner because the real is appreciating, and you also earn the carry throughout all this period, okay? So regarding fiscal numbers, Brazil has a big nominal deficit of 1 trillion reais north of it, but most of it is interest payments. So any market-friendly candidate could reverse that with fiscal policies that are credible. Well, last week anyway was a bullish one for Brazilian bonds. Implied inflation's dropped from the 10-year dropped from 587 to 575. A good week. A good week for rates too. We can see here heavy volume and rates going lower than their monthly average. This is January 33 future. January 27, which is more coupon related, also heavy volume, some heavy selling. And we have the market expecting, looking at FRAs, implied FRAs, 1220, almost 300 basis points of easing. And we did a small exercise here. If we consider 50 basis points reduction in 17th of March, and then 275 basis meetings and 250, a total of 300 basis points, which is pretty much in line with projections from big banks. We still would have a premium of 42 basis points for DI future January 27, okay? Last week, 2 weeks, we saw this big rally in Brazilian equities. I like to look our market cap, the Bovespa market cap by the M4 money supply. We almost tested the lows of the Dilma crisis and commodity crisis in 2015, last year. Now we are exactly at the midpoint, 1224. But we were higher in 2019 because we had less money circulating, and we were still lower than the 2021 highs when we were having all sorts of IPOs and etc. Market was very hot. And we created a lot of currency since then. So here I wouldn't be short at Brazilian equities. I would be buying on the dip. Since these levels, we've been advocating buying. And this is the same graphic zoomed up, okay? MSCI Brazil, EWZ, reached new highs. Some sell-off following the S&P last week, but still this is an upward trend. We can see that the EWZ is very compressed still against EM, the ETF for emerging markets in general. Against gold also, Brazil is very cheap, it's even lower than the COVID levels. EWZ Brazil versus Mexico. Brazil had a brief rally, but we still can go much higher from here if compare this graphic, historically speaking. And against IWM, a probable candidate for a rotation trade, Brazil is behaving well, but it still has some room to appreciate to at least get to average here, okay? I like to compare small caps against the DI market, bond market. We were buyers of small caps here and here because there's a supply and demand issue here that while we haven't seen any big equity issuance or supply by the market, the Treasury has been selling bonds to finance the nominal deficit. So we knew that someday this ratio would spike higher. Indeed, it has, because small caps have moved sharply higher and rates haven't moved much. And so we can see longer term, we are here approaching a first resistance level. And then longer term, we can still go higher, but it would be slightly cautious here, okay? Perhaps change some equity to bonds. And when we compare the small index to the IRFM, which is an total return index for fixed income bonds, fixed rate bonds, we can see that the ratio can move higher. And if we ever go back to 2021 levels for some reason, political maybe, there is room for these equities to double in value, okay? Well, for corn, they have been helping inflation numbers and production numbers for food companies keep them subdued. Coffee also, after a big rally, is now sidelining here. And so the conclusion is still a strong market for Brazilian equities. I will be buying on the dips. Have to be careful because commodities may sell off a little bit more, but still our main theme doesn't change. Economic growth is here to stay, and commodities may very well be bid from now on, but they can always have a correction in the middle of the way. So you will be buying on retracements and always remembering that everything can happen in financial markets. So you always have to save some space for sharper sell-offs, okay, to be able to buy on sharper sell-offs and not hush yourself. I think that's it for this week. I would like to thank you for your audience. Please hit the like button and subscribe to our channel for further updates. Good luck, everyone. Bye-bye. See you next week.